Hey everybody, Rob Maurer here, and today we are talking about some initial reaction to the Tesla Semi from Pepsi, Frito-Lay. We also have a couple more pricing adjustments from Tesla, news on FSD Beta. We'll talk a little bit about Super Bowl ads from automakers and a couple other items as well. Another underperformance for Tesla stock today. To start the week, Tesla was down about 1.1% to close at $194.64, while the Nasdaq was up 1.5% on the day today. Tomorrow, probably more important though, as we will get the CPI Consumer Price Index report for January tomorrow morning. And remember, this time around, a particular point of emphasis would be non-housing services. Fed Chairman Jerome Powell at the last FOMC meeting highlighted that as a very critical area, of course, that has yet to show signs of disinflation happening. Later this week on Thursday morning, we'll then get the PPI or Producer Price Index report, so we'll keep an eye on that. And then still a few weeks out from Investor Day, Elon did give a bit of an update on that on Twitter today. Just saying, quote, "Looking forward to Tesla Investor Day on March 1st. By this, we mean the broadest definition of investor, as in the people and life of Earth. It will be a message of good hope and positivity for the future," end quote. There were some rumors going around on Investor Day today. Stuff like that's kind of tricky because I don't want to omit it, but I don't want to hype it up because it's just a rumor. But the gist of the rumor is that a source at Tesla has told this person that there would be a vehicle unveiled on March 1st. But the source also thinks that it won't be produced for a few years, so that seems to be a little bit conflicting. I don't think Tesla would really do a full, proper unveil if it was still planned to be a few years away. And unveiling something like that at an investor day wouldn't really fit with Tesla's historical process, so obviously Tesla has mentioned talking about a Generation 3 platform, but to me it would seem to stick more to the platform and how the platform is going to come to be, rather than sort of unveiling a specific vehicle, but we'll see. All right, moving into some other news, I want to start off with another round of pricing adjustments from Tesla. We talked late last week about some changes to the Model Y in the United States. Just a few days later, we've got more changes on the Y and also an update on the Model 3. So if we break out our handy-dandy price change table, we can see that Tesla has again cut the price of the rear-wheel drive Model 3 by another $500, a little bit more than a week after a similar reduction at the start of February. So since the big price cuts, the Model 3 rear-wheel drive is now $1,000 cheaper than it was in mid-January. Still, as we noted last time around, Model 3 rear-wheel drive is still $5,000 more expensive than it was at the beginning of 2021, so 13%. The dollar variance there is tied for the highest among any Model 3 or Model Y trim, and the percent change is the highest. So probably not something to be overly concerned about, and I think the Model 3 right now sits a little bit in isolation from the rest of the business, as we have all these rumors about Project Highland and what that might entail for the Model 3. The other adjustment, just like we talked about Friday, is again on the Performance Model Y, which has increased another $500, now starting at $58,990, and then the shorter range 4680 Model Y, which right now is only showing up sometimes in inventory. Turns out that actually increased by $500 on Friday, and then $500 again this weekend. So that version now starting at $51,990 when it does happen to be available. So all of these updates create more space between the Model 3 and the Model Y, which should help shift mix a little bit more towards the Model 3. I think Tesla probably just moving in these small increments to dial things in after what was a very significant cut in January. Such extreme changes probably a little bit more difficult to model, so Tesla making tweaks after that point. Outside of the United States, we also saw some changes in New Zealand pricing this weekend. Tesla lowered the price on the base trims, Model 3 and Model Y there, by 2,000 New Zealand dollars. Next up, we've got a little bit of news on the Tesla Semi. CNBC today publishing a 16-minute video, shares some insight from Pepsi, Frito-Lay management on the Tesla Semi so far. Unfortunately, interlaced with a lot of commentary from third parties that are not involved, but share their speculation with the utmost of confidence, which largely creates a skeptical undertone through pretty much the entire video. So it is interesting. I'll link to the video in the description, but we'll hit the highlights here. I think probably the biggest thing, and something that I don't think we have heard too much about from Pepsi yet, was the reception to the Tesla Semi from Pepsi's drivers so far. So VP of Supply Chain Mike O'Connell noted that so far driver feedback has been positive, and that drivers in particular really like not needing to fuel the vehicles, just plug them in and leave them, and they also like the overall performance of the Tesla Semi as well. So at this stage, we have to consider that Pepsi is very likely to emphasize the positives and speak glowingly about this project, but it's still nice to hear that commentary, and I think those comments would align with many of our own experience with Tesla vehicles, different use cases, but those benefits still stick out. Pepsi also noted that on average, their Class 8 truck trips are 425 miles. I took that to be speaking about their total fleet, not just the Tesla semis, and they said the Tesla Semi is already doing trips of that length, so they feel confident in being able to expand this over time. Couple of other things, we've talked a few times about Pepsi's comments about the chargers being 750 kilowatts. They again said that in this video. We've worked through the math on that, how it doesn't really make sense before. So I'm still confused about how this is working out. In this video, they said 750 kilowatts and charge about 400 miles in an hour. That gets close to the math being possible depending on the battery pack size. Still probably not though, and that would mean there would have to be close to no charging curve throughout the charge, which is definitely not what we see Tesla do with other vehicles. Finally then, a portion of their B-roll footage did show an interior camera. Not sure if we've seen that yet, but it looks pretty similar to the interior camera that we see in Tesla's other vehicles. And Pepsi did comment on autopilot. They said, quote, "The autonomous functionality of Tesla is not spec'd for these vehicles. They have the hardware capability. We'll get to that down the road as an additional capability," end quote. So not too surprising on that since we haven't heard Tesla mention too much about it. But with the Tesla Semi out in Arizona for the Super Bowl, looks like we got a shot at how Tesla's got the cameras set up on the Semi. Brandon on Twitter sharing a couple of photos and a short video of that hardware. It looks like there are at least 3 cameras housed in the side view mirror, one facing the rear, one facing the side, and then one facing actually straight down at the road, which would probably be the most different orientation than we see on any of Tesla's vehicles today. And then Brandon also spotted the front housing, which seems to have at least 3, maybe 4 cameras, which may not be surprising, but perhaps notable given that we had previously some of that paperwork that came out of China that talked about having only 2 cameras in that front housing for next generation hardware. Now, we don't even know if that's going to be the case, and regardless, there will probably always be some differences between the Semi and other vehicles. Lastly, on the Semi, Zangler on Twitter, who has been keeping a close eye on the count, now believes that we are up to 38 Tesla Semis that have been spotted. We don't know that number for sure, but probably as good of an estimate as any. All right, next I want to talk a little bit about the Super Bowl last evening. Thought maybe we would see the Tesla Semi show up in an ad for Pepsi or something like that. Looks like no luck on that, but still some relevant things to talk about here for Tesla, especially given that last year, Tesla saw a big spike in orders following the Super Bowl despite not having any advertisements, just from other automakers talking about their EVs. This year, it seemed a little bit different. We didn't have as many automaker advertisements this year as we did last year. Maybe they just got tired of advertising for Tesla, but it looks like, according to Northwestern's recap of these ads, they grade them each year. I think as far as national ad spots go, there were only 4 automakers: Kia, GM, Dodge Ram, and Jeep. So unless I'm missing one on this list or Northwestern's list is non-exhaustive, which I don't think is the case, that would only be half as many as the 8 brands that advertised on the Super Bowl last year. So that's a pretty big reduction. I think it's interesting and meaningful, but it's difficult to say exactly what there is to take away from that. I think largely the purpose of these ads has been to present these brands as electrified, moving into the future, we're still going to be there, etc. Maybe just with the current climate, a little bit less willingness to do that this year, which might be a sign of some of what we've talked about in the past. Entering this type of an environment, some of the belt tightening that will occur with some of that possibly hitting the willingness to invest in EVs, which this would be to some brands considered a portion of. You may have also seen on Twitter a Popeyes ad that was supposed to be for the Super Bowl that featured a Model Y, a little bit altered, but clearly a Model Y. But I don't think this ended up being a national ad. I don't see it on Northwestern's list. Maybe it turned into a local ad instead, which, speaking of local ads, you may have heard about the plans for Dan O'Dowd's Dawn project, which argues against full self-driving from Tesla. They had a Super Bowl commercial as well, but it was a local ad, very similar to the other ads that we have seen from him. Reminder, he is a competitor of Tesla, likes to claim that he is somehow not, despite working with Mobileye. So we've talked about that plenty in the past, don't need to go down that path again, but his ad turned out was a local ad as well, aired in Washington, D.C., and some other capital cities as well, obviously just trying to politically influence. So anyway, with fewer automaker ads in general, I think Tesla probably saw a little bit less of a spike this year than they did last year. From Google Trends, it looks like Tesla did get a little bit of a spike in search interest around the time of the Dodge Ram EV commercial, but my hunch is that with fewer ads, Tesla probably got less of a boost this year than last year. All right, moving on, we've got a couple updates on FSD. Elon this weekend saying on Twitter that version 11.3 single stack goes to limited beta this week, probably 11.3.2 before wide release in North America. Then we adapt for EU roads and submit to regulators. 90% of what we've done so far for North America applies worldwide. So we'll see, we've continued to hear a couple of weeks for version 11. That timeline does seem to be tightening and less hedged, so hopefully it's getting closer. And Teslafy today noticed a new software version 2022.45.5, which TeslaScope on Twitter is saying is a version 11 employee build. So hopefully that is a sign that Tesla is doing at least a wider internal release for employees, which usually puts us relatively close to some non-employees starting to receive it, but not in every case. All right, next a bit of an update on Tesla Solar. Tesla has updated the configurator or design studio for solar on their website. It now shows things like a satellite image of the roof that you enter, offers a little bit more customization in terms of your setup, some more information on Powerwall integration, and expected savings. Always nice to see those updates on solar. We've also got an update on Giga Berlin shared by Tesla on Twitter. I think this is just drone footage from the videos that we have previously talked about, so nothing too new for those that have followed closely. But nice to see Tesla being a little bit more intentional in broadening the distribution of some of these things. All right, last couple of items. We're starting to get more year-end investor filings. A couple of notable ones here. CalPERS, or the California Public Employees Retirement System, which manages about $460 billion in assets, has disclosed in a filing that they have increased their stake in Tesla throughout the year. They now own 6.4 million shares of Tesla stock. That's a 676,000 share increase over last year, or about a 12% increase. So nice to see that, especially out of California. And then MarketWatch is also reporting on an increased position from George Soros Fund Management. They are misreporting on it a little bit. They say that they added 242,000 shares, but if we look at the filing, 200,000 of those are not actually Tesla shares. They are Tesla shares controlled via call options. So similar to what we talk about when we talk about Michael Burry's short positions, how the media always reports on that and inflates it because those are puts. This position is leveraged, so it would cost less than 200,000 shares would outright. Still interesting to see that the Soros Fund bought a bunch of calls on Tesla in the fourth quarter. Finally then, we've got a bit of an update from Toyota, some comments from their new incoming CEO, saying that Toyota would be ramping up their battery electric offerings, focusing on their Lexus brand, which sounds pretty good at first, but he also added that, quote, "This is not a fast pivot towards battery EVs, and, quote, to the point that we have been slow at battery EV projects, I think around half of it is a communication issue," end quote. All right, so new CEO, but doesn't sound like too much changing for Toyota, still dealing out more comedy than EVs. I think their messaging has been quite clear, certainly much more clear than the value proposition of any electric vehicle that they have tried to bring to market. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, February 14th episode of Tesla Daily. Thank you.